Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about Brexit and what happens as the Brexit deadline approaches and the potential trading opportunities that will continue to appear as a result of the Brexit issue. My name is Sasha and I'm a financial analyst from the research department at 4Trade. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, first off, we'd like to introduce you to what we call a market opportunity. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. This can relate to daily trading, weekly trading, or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's solely your decision whether you trade on market opportunities or not. So here's an example of a market opportunity. You can see some fundamental analysis on what's going on with the pound-dollar currency pair. Below you can see some geopolitical events that can influence the currency pair, such as the resignation of the UK Brexit minister in this instance, or positive figures in the US. It's important to look at the pivot point on which the calculations are based. If the price reaches the level you can see on the screen here, that's 1.2840, this shows the right moment in our estimation to come in and open a trading position. That's had you decided to trade on this market opportunity when it was active. You can see that this is a weekly market opportunity, although we also have regular daily trading opportunities. You can see the trend direction here, which is down. It's important that you know how to use the stop loss and take profit options. You have support and resistance levels here. At these points you can put a stop loss and take profit, and on the right hand side of the page you have calculations. If you close the position using take profit, you can expect these kinds of profits at support 1, 2 and 3 in green. If the price is going against you, then you can have a loss of the amount shown at resistance 1, 2 and 3, and that's in red. The pivot point is the starting price based on which resistance and support levels are calculated. The support and resistance levels here are for daily, weekly or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So a quick or brief history of Brexit. In 2016, on June 23rd, the UK held a referendum which was expected to produce a narrow majority in favour of remaining in the European Union. The leaderships of all three main political parties in the UK supported EU membership. However, almost 52% of the country voted to leave the European Union, while just over 48% voted to remain. Since then, the Conservative government, propped up by Northern Ireland's Democratic Unionists, has been negotiating with the EU, while the Conservative Party itself is divided on the issue. Those that want a clean break from the EU with no trade agreement are referred to as hard Brexiteers, and those who want to continue some kind of customs agreement are called supporters of a soft Brexit. There is a third group that is gathering some political momentum who are pushing for another referendum that broadly want to remain in the European Union. In June 2019, former UK Prime Minister May stepped down. She tried and failed 3 times to get her Brexit deal through Parliament and became the second Prime Minister following David Cameron to end their top-level political career due to Brexit. Since then, the new Prime Minister Johnson has taken a hard stance on Brexit, insisting that he was ready to leave the EU on the deadline of October the 31st. But just as time was running out, Johnson left for Ireland and on 10th of October agreed a deal on the crucial backstop issue with Irish Prime Minister Varadkar. As tensions grew, noises came out of Brussels that the EU was now very close to a deal, and on October the 17th, EU leaders endorsed Johnson's plan. The plan itself was very similar to Theresa May's. But let's leave the commentary and look at exactly how the markets reacted to the news. As you can see, the pound climbed sharply when it was announced that Johnson would rush off to Ireland for a last-ditch attempt in gaining a deal with the EU. Positive noises coming out of Ireland and then from EU officials over the following days spoke of how the two sides had agreed an alternative to the backstop, the main stumbling block to a deal. The EU finally declared a deal had been made on October the 17th, which saw the pound rise by an astonishing 6.37% in that weekly period. Major currencies usually tend not to move so sharply within a short time frame. In fact, the most extreme example with the pound was when the UK voted to leave the EU on June the 23rd, 2016, and sterling dropped like a stone, as you can see here, by almost 12%. So, what's the current situation? The latest event was waiting for the EU to decide how long a Brexit extension should be. Despite some division on the topic in the EU, on Monday it was decided to grant the UK until the end of January. Despite Johnson's commitment not to seek a Brexit extension, the opposition and some rebel conservatives forced him, through legislation, to write a letter asking for an extension from the EU, since they feared that the government would leave the EU without any deal. The fact that the UK and EU have a deal, however, does not mean Brexit is resolved. It simply means that the battle moves to UK's Parliament, where there is widespread disagreement. After all, Theresa May also sealed a deal with the EU, only to be defeated in Parliament in trying to get lawmakers to support it. Despite this and the countless defeats that Boris Johnson has already suffered in Parliament, the government managed to get Parliament to support the deal in principle. It was not rejected. Now, though, the proposed law faces many hurdles, which will include attempts to amend it, to include either a customs union or even a potential amendment to put the proposed deal to the British people in the form of a referendum. That could include an option of remaining in the EU. From an investment perspective, trading the pound has been very easy since Brexit. It is arguably the easiest currency to trade, since other factors such as economic data or interest rates have only a minor impact on the pound, while the Brexit issue drives the currency up or down. So, in the short term, news that the EU and the UK have a deal supports the pound, while instability or failed deals pushes the pound down in value. But the worst scenario for the pound is if the UK leaves with no deal. There is a consensus that this will drive the pound sharply lower, and for British and some continental European stocks to fall, while gold prices would be supported. But the point is that even if the Brexit subject is complex, you don't have to understand everything to do well trading on it. Well, I hope you found this webinar useful. Of course, at ForTrade we will be following ongoing Brexit developments. Please get in touch with your senior account manager for further information. Until next time, goodbye, and please join us at ForTrade again soon.